But now that's been swallowed up by, new highs. So we have to look at it and say, what's information? So I have a Discord, and one of the channels in there is called Interesting But Not Helpful. As you can imagine, Richard, I'm a little bit of a hard ass. I'm like, okay, so what? How does that help us make money? What are we doing here? We're trying to make money. I call them back of the baseball card statistics. 5 out of the last 8 times when we had a full moon and we were touched the 20-day moving average, we had 18% return 6 months out. That's not a trading strategy. That doesn't mean anything. It means, okay, it's like seasonality. Selling May and go away. It's been awful. Santa Claus rally, last 4 years has been a complete dud, right? Those are times of interest. Okay, I'm interested. Typically rallies in this area, I'll be extra alert. But I'm not just going to buy because of some stupid little Santa Claus rally thing has worked 8 out of the 13 times, whatever the numbers are. I don't know. It just says pay attention a little bit, be a little bit more on your game.
And I want to zoom in a little bit on the confluence that you pointed out of that level and the 5-day moving average on the intraday chart. Just shortly, this past pullback, this most recent
yeah. So this little desolation.
Yeah, just talk to me a little bit more about levels of interest and why you specifically say of interest and not of must obey to the cent and stuff like that. Break that down for me. That would be great.
People always say, well, the market has resistance. When you're down here, they'll say the market has resistance at this point right here. They'll say, well, that's resistance. Whatever, there's resistance at 695 when you're at 680. And I'll say, well, no, you don't know that. We only know support and resistance in anything in hindsight. We don't know whether that gravestone doji meant anything. If it failed from there, you'd say, okay, well, that's why. We didn't know that Fastly was going to find buyers at the year-to-date, the earnings anchor, and the 50-day moving average. But when more people come to the same conclusion in that same area, it kind of increased the odds because one guy might be thinking, hey, the 50-day moving average, I'm going to buy there. Another guy might say, it's the earnings anchor, I'm going to buy there. Another gal says, I'm going to buy at the year-to-date anchor. She got it right. They all got it right, because it moved well from there. But there are levels of interest, and we want to say, why are they levels of interest? Well, this was a level of interest on it at 695 because we had previously been rejected there 1, 2, 3, maybe 4 times. So there's price memory in there. What that says is, and that's what the VWAP is, price memory from the beginning of the year. Where's the memory? Where's the average participant anchored? Where's their bias? So this becomes, the more volume that traded there, the more likely it is there's going to be people saying, well, I'm at break even.